Hi guys, how are you doing? I know today I'm coming looking like whatever you think I look like, but absolutely why not? So I I wouldn't even start explaining what happened to the first video on today's topic, but if you do follow me and if you have seen, I did post a video on Saturday on ETFs explaining what ETFs are and why I buy ETFs. So it was only necessary for me now to give you the lead so that you can be able to judge for yourself and also make the final decision, that is choose an ETF and go with it, run with it. So today is that video. So without wasting further time, we're not wasting further time, I just want to know how you're doing. Anyway, without further ado, let's get straight into the video. So the first ETF which I'm going to teach you on is an ETF listed in our own Kenyan soil, that is on the NSE, and that is the Absa New Gold ETF. So I will be giving you this information based on research. I have personally now bought this ETF and I do not have experience with it on a first hand, but I have done research on it. So Absa New Gold ETF is in the business of trading gold, that is buying and selling gold, in case that is not clear, buying and selling gold. And the reason why I'd absolutely buy gold, especially during this year, is because of the uncertainties that are happening with the American currency, that is the US. And the reason why I'd buy this particular ETF is, one, because of the uncertainties that are going on the value of the US currency, and that's why gold prices are going up. So gold prices going up means that this ETF also goes up. Gold is seen as a safe haven against any calamity that faces a country's economy. So if you are Zambian or if you're Kenyan and you want something above your economy, then you definitely buy gold. So if you're going to buy this particular ETF, please ask your broker if they do pay dividends so that you're sure. Most online sources show that they do not pay dividends, so that you can just be able to know if this is for you or if this is not for you, if you're there for the dividends. But the capital gains are good, especially this year. The capital gains are really good. It has really gone up in value. So yeah. The other question you want to ask your broker is how easy it is to buy and sell these shares, aka if they do have a market maker. A market maker is just a ready buyer or a ready seller. And the second ETF is the Satrix MSCI World Feeder ETF. This one is a new ETF. It was listed here on the NSE in July of this particular year, but it was formerly from Johannesburg. So you can be able to determine how it's performing based on how it's been performing in the Johannesburg Stock Exchange. This MSCI World ETF mimics an ETF, an index called MSCY, MSCI World. Let me take you through how this thing works. Yeah. So the Satrix in Kenya invest in a bigger ETF which still mimics MSCI World. MSCI World is an index. I did explain in my previous video, I did explain the relationship between an index and an ETF. An index is like saying your index one, and then an ETF is me investing in you as a person. So this MSCI World Index, it tracks over 150 companies in 23 most developed economies of the world. So these ETFs now, they invest in these companies. So those are the two ETFs that we have in Kenya. If you do choose to take advantage of them, please let me know in the comments section. The good thing of investing in the Kenyan ETFs over the ones abroad is that you don't lose money while transacting. When I'm sending my money from my bank, I use Stanchart to VOO's bank, that is Citibank. There's usually some 3k, 1k to 3k lost in that process, just depending on how much I'm sending. So that is definitely a disadvantage, and if you're investing in Kenya, you get to save on that 3k and add it onto your portfolio. Now that we all know those ETFs, can you guys see me? Damn. Anyway, now that we know those ETFs, we'll go straight to the ones in America. And the reason why I'm giving you this particular list of the American ETFs, first of all, is because of the demand that occurs in these markets. There's so much demand for these particular ETFs. Why? Because ETFs take off that stress of keeping up with companies in the stock market, and also just figuring out which company to buy and when to buy it and when to sell it. So ETFs do take off that stress, and that's why so many people do come and invest in ETFs, and that means there's a higher demand for these products in this market than in our Kenyan market. And that's number one reason why I bought this particular one. And the first ETF is called VOO, and it's by a stockbroker called Vanguard. I have my notebook right here. So this ETF copies or invests in the companies which are tracked in the S&P 500, which are 500 best performing shares or most valuable companies in the US stock market at any given point. At any given point, 500 best companies. That is what VOO invests in. So cherry on top, apart from the demand, and you know why I'm talking about demand is because the stock market is driven by demand, and also I'm sure about all other financial markets. The stock market is also driven by demand, meaning if a share is in demand, its price will go up, and that means more capital gains for you. If a share is not in demand, the price will go down. That means that your value will fall. So you want to buy something that is in demand. So apart from being in demand, the second reason is that they actually do pay dividends, and they pay dividends very regularly. That is once in every 3 months or quarterly. The other cherry on top is their very low management fees. They charge management fees of zero. This is VO charges management fees of 0.03%. So if you've invested $1 million with them, that is 300 bob. This particular ETF pays dividends of 1.4 to 1.6%. The other ETF is SPY, and it is by a broker called Spider, SPDR, not Spider the Munyama, but SPDR. This one also invests in the same companies that are tracked in the S&P 500. However, VOO has an edge over this one because of the management fee. This one charges a management fee of 0.09%. This one also pays, by this one I mean SPY, it also pays dividends quarterly, that is in every 3 months, and the dividends range between 1.6, sorry, I do not have the dividends for that right now, but I'll pin it in the comments section. ETF number 3 that I'm bringing to you is called Spider Dow Jones Industrial Average by the same investment firm called Spider. Now, this ETF invests, I keep on doing this, which is just so wrong. This ETF invests, it invests in the companies which are tracked by this this index called Dow Jones Industrial Average. So these terms are mouthfuls, but at the end of the day, you'll get used. The same way you got used to money markets, it's the same way you'll get used, yeah? So this index tracks 30 best performing companies in the US stock market at any given point. I hope you do understand when I hope it sinks when I say at any given point. At any given point, what does that mean? That they're figuring out for you which are these 30 best companies today, tomorrow, next year. They're figuring out for you, and the reason why it's so easy for them to figure out is because they've leveraged on AI and on technology to manage this particular data. They use algorithms actually to determine the 30 best companies. So that means if one company drops, then it's replaced by its competitor, and that's why they charge very, very low management fees, because it's technified. So this ETF does pay dividend, which is what you really want to take advantage of. It pays dividends, and it pays dividends monthly. Very easy. Why? Because these companies are dividend aristocrats. What that means is that they've been paying and increasing dividends consistently over the past 25 years. So it's their culture, it's their norm to pay dividends, and that's why this particular ETF pays dividends monthly. And I must say, the reason why there's this standard of regular payment of dividends is because these companies are the global giants. Okay, these companies they have the entire world, the entire globe as its marketplace. I mean, me and you see it as a communication channel, WhatsApp, but it's actually making Mark Zuckerberg money. You know, me and you see Instagram and YouTube as a way of creating our personal brands, but there's someone who owns it. So when you invest in such ETFs, you're actually gaining from them. So there's that mutual benefit. So the other ETF that I want you to decide on is QQQM. This one is by a company called Invesco, and it invests in companies tracked by Nasdaq 100. Nasdaq 100 is a group of 100 tech and growth companies in the US. So if this is your favorite, it is my favorite or among my favorites. If this is one thing that makes your blood boil, then yeah, choose it. Cherry on top is that they also pay dividends, which range from 0.6 to 0.8%. Their management fee is 0.15%. The final ETF that I want to bring to your radar is SCHD. It's called Schwab US Dividend Equity ETF. Such a big name. It's by a company called Charles Schwab, and this one is a dividend ETF. I'd buy this any day, any year, any day again. Yeah, why? Because it's a dividend ETF. That means is that it's more dividend paying than the other ETFs. So it invests in companies tracked by Dow Jones 100, and these are companies which have been paying dividends consecutively, year after year, for the last 10 years. They've been paying dividends consecutively. So it pays dividends, yes, and the rate is at 3.6 to 3.9%, which is the highest of all that I've said here. Its management fee is 0.06%. So there's a lot of demand around this because most investors will be going for dividends for sure. So there's the capital gains that comes with that goodwill. So those are the top best ETFs that I would recommend to anyone. Just choose one and run with it, depending on the dividends, the risk. Is it 30? Is it 500? Is it 100? Just choose one as a starter and run with it. If you don't know where to start, there's a broker called Interactive Brokers. Should I attach the link? If you need the link, DM me. I will send you that link. Yeah, I don't know if I should do a video on how to register there, but you can comment down in the comment section if you want a video on how to register on Interactive Brokers. They will need some of your documents. They will need your registration, your identification, your something to prove where you live, and so on. Just comment down below. Register on Interactive Brokers, load your account, and buy your ETF. ETFs are passive income earners, to mean that you can make money while you're sleeping. Yeah, thank you so much for watching. If you're not subscribed, it is your turn to subscribe right now, and I will see you in my next video. Bye.